Matt Dash.
I'm calling it a Buffalo Springfield morning. There's something happening here. What it is ain't exactly clear, which is the Reddit stock continues to go up. This morning, Newsfeed was not part of the deal, comes out and says, look, you got to buy this neutral stock. But, I mean, it talks about no change, $54 price target. Well, good luck. And this stock, once again, is up this morning. Obviously, this deal was placed very well. Maybe when we speak to James Gorman, we ask, I know he's not really, he's going to say, listen, it's up to the red Ted pick now at Morgan Stanley. But, wow, this thing's incredible, 95%.
Reddit shares surging 30% to kick off the company's first full week as a publicly traded stock. The stock's options debuting today with some eye-popping numbers. Let's get straight to Mike Coe with all the action. Hey, Mike, what are you seeing?
Yeah, so Reddit traded over 81,000 contracts today. That would have placed it ranked 30th in the Russell 1000 if it was in the Russell 1000, above JP Morgan. And right now, the options are pricing some pretty violent moves. If you take a look at the April straddle, basically it's implying that the stock could move about 35% higher or lower over the course of the next 3 weeks. But actually, considering how much it moved today, that seems very fairly priced to me. The busiest contract were the April 75 calls. Those are 25% out of the money. Over 7,000 of those traded buyers of those calls, obviously betting that today's rally could continue.
Wow. Do you interpret this, Mike, and I would, that this is retail action?
Well, there is a lot of retail action. And actually, 81,000 contracts, given the fact that the stock traded 22 million. Oftentimes, when you see these really volatile stocks, you'll actually start to see that the option volume will exceed the equity volume. This, because it was the first day, maybe some people weren't even aware that they were able to trade these things yet. But the one thing you do expect is that over time, usually over the first couple of weeks, you have this really high volatility, and then it'll start to fall off steadily as people sort of find a level for the stock, and the options premiums will also come in a bit.
All right. Mike, thanks, as always. Mike Coe. Meantime, the original meme stock, GameStop, shares seeing their best day since November, up more than 15% today. The company reports earnings tomorrow. And check out Digital World Acquisition Corp. Soaring 35%. It will complete its merger with the parent company of Donald Trump's Truth Social tomorrow under the ticker DJT, so it will convert tomorrow to that. I don't know, what do we make of this action overall and these sort of meme riskier names? But, the action in Reddit is very interesting considering the huge dramatic surge that we've seen since the debut.
Well, I think if you think about what's going on in the semiconductor space, there's been a narrowing within that too, right? So we've seen that over the last, let's call it week. We've lost AMD, lost Intel, but you still have SMCI and NVIDIA pushing higher. So I think the idea that there's more supply coming on the market, new stories that people can pick through, that sort of thing. Look at this Astera Labs. It was up 23% today. Look at how Bitcoin's traded or some of the stocks that are related to Bitcoin, that sort of thing. It just seems like there is demand for scarcity right now, which seems like a great time to bring your private company to market if you are considering such a thing, especially when you consider the S&P at NASDAQ at all-time highs.
Well, Bitcoin's over 70,000. I mean, there's definitely correlation there. I mean, the risk frenzy that's going on with some of the same investor group. I mean, I don't. What was the news in GameStop today? I mean, why?
I mean, they're going to have earnings tomorrow.
Right. But
short squeeze in there.
So here's the point. I don't follow GameStop, so but I don't want to follow GameStop. I mean, I'm not even sure what goes on there. So I mean, I think there's a lot of stocks in this milieu that are rallying with all the risk on right now. Markets are at all-time highs.
Yeah, I think Reddit is somewhat of a poster child for that retail trading cohort that is sophisticated, perhaps a bit angry or anti, as they say. And I wouldn't be surprised to see this stock continue to trade with quite a bit of volatility. I think they expected that. And I think we shouldn't be surprised to see the options activity, being that has been the cohort of retail investors that have really grasped on to squeezing companies through optionality and gamma squeezes.
By the way, Reddit shares are up 9% after hours.
That CNBC video highlighted the incredible surge in Reddit's stock price during its first full trading week as a public company. Soaring an astonishing 30%, this meme stock has set the investing world ablaze, igniting a frenzy that has captured everyone's attention. First, a massive thank you to all our loyal viewers for tuning in to InvestMinder. If you're new here, don't forget to subscribe and hit the bell icon to stay updated on our latest investing videos. We're your trusty companions navigating the thrilling world of stocks and investments. Before we proceed, let's address the disclaimer. We are not professional financial advisors, and this content is solely for educational and entertainment purposes. Always conduct your own research and consult licensed professionals before making any investment decisions. Now, buckle up, fellow investors, because we're about to embark on a wild ride exploring the Reddit phenomenon that has the financial markets buzzing. This meme stock mania is just getting started. The Reddit stock frenzy is a testament to the power of social media and the rise of the retail investor. This online community, once known for its quirky forums and memes, has transformed into a formidable force in the financial world, challenging the traditional norms of Wall Street. At the heart of this phenomenon lies a passionate group of individual investors who have banded together, leveraging the power of their collective voice to influence the stock market like never before. Fueled by a desire for disruption and a mistrust of the establishment, these Reddit traders have proven that they can move markets and shake up even the most entrenched institutions. The surge in Reddit's stock price is not just a one-off event, it's a symbol of a larger movement that has been brewing for years. The rise of commission-free trading apps like Robinhood has democratized access to the stock market, empowering a new generation of investors who were once excluded from the game. These Reddit traders have embraced a different mindset, one that defies conventional wisdom and embraces the unconventional. They've shown a willingness to take on immense risk, betting big on companies that were once considered lost causes or meme stocks. Their mantra: buy the dips, hold the line, and never sell. A rallying cry that has become the battle anthem of this unconventional investing army. But the Reddit revolution isn't just about making money, it's also about sticking it to the establishment and challenging the status quo. These traders see themselves as the underdogs, taking on the Wall Street elite and their perceived manipulation of the markets. They've found strength in numbers, using their collective voice to expose what they believe to be unfair practices and fight for a more level playing field. Of course, not everyone is thrilled with this new breed of investors. Traditional financial institutions and analysts have criticized the Reddit traders for their reckless behavior and disregard for fundamental analysis. They argue that this kind of speculative frenzy is unsustainable and ultimately harmful to the markets. Yet, the Reddit phenomenon persists, fueled by a sense of camaraderie and a belief that they're part of something bigger than themselves. These traders have found a community where they can share their thoughts, strategies, and even their losses without fear of judgment or ridicule. As the Reddit stock saga continues to unfold, one thing is clear. This is more than just a flash in the pan. It's a cultural shift that is challenging the very foundations of the investing world, forcing us to rethink our assumptions about who has the power to move markets and shape the financial landscape. The Reddit stock phenomenon has also shone a spotlight on the role of options trading in fueling these frenzies. As the CNBC video highlighted, the options activity surrounding Reddit's stock debut was nothing short of staggering, with traders betting big on wild price swings in the coming weeks. Options trading has long been viewed as the domain of sophisticated investors and institutions, but the Reddit army has embraced these complex financial instruments with a fervor that has caught many by surprise. By trading options, these retail investors have found a way to amplify their bets, potentially multiplying their gains, or losses, in a way that simply buying and selling shares cannot match. At the heart of this options frenzy lies a strategy known as the gamma squeeze. By purchasing large quantities of call options, particularly those that are out of the money, Reddit traders can create a feedback loop that forces market makers to hedge their positions by buying more shares. This, in turn, drives up the stock price, creating even more demand for call options and so on, a self-perpetuating cycle that can send a stock soaring to dizzying heights. While this strategy has proven effective in orchestrating short squeezes and triggering massive rallies, it's also incredibly risky. Options are inherently complex financial instruments, and their value can be affected by a multitude of factors, including volatility, time decay, and the underlying stock's performance. Yet for the Reddit traders, the potential rewards seem to outweigh the risks. They're drawn to the thrill of the chase, the adrenaline rush of riding a wave of momentum, and the satisfaction of sticking it to the short sellers and naysayers who doubted their collective might. But it's not just about making money or sticking it to the establishment. For many in the Reddit community, this is a form of rebellion against a system they perceive as rigged and unfair. By banding together and embracing unconventional strategies, they're challenging the traditional power structures of Wall Street and asserting their right to shape the markets on their own terms. Of course, not everyone is impressed by these tactics. Regulators and financial experts have warned about the potential risks of such speculative behavior, citing concerns about market manipulation, excessive volatility, and the possibility of widespread losses for inexperienced traders. Yet, the Reddit army remains undeterred, fueled by a sense of camaraderie and a belief that they're part of something bigger than themselves. They've found a community where they can share their victories, commiserate over their losses, and revel in the thrill of the chase. A virtual trading floor where the only rules are the ones they make themselves. As the options frenzy continues to grip the markets, it's becoming increasingly clear that the Reddit phenomenon is more than just a passing fad. It's a cultural shift that is challenging the very foundations of the investing world, forcing us to rethink our assumptions about who has the power to move markets and shape the financial landscape. While the Reddit stock frenzy has captivated the investing world, it has also raised important questions about the long-term sustainability and potential consequences of this unconventional approach to trading. On one hand, the rise of the retail investor army has been hailed as a democratizing force in the markets. By leveraging the power of social media and online communities, these traders have proven that they can move markets and challenge the dominance of traditional financial institutions and Wall Street giants. Proponents argue that this newfound power in the hands of the masses could lead to greater transparency, accountability, and a more level playing field in the investing world. After all, if a group of individual traders can band together and take on the establishment, it could force the industry to clean up its act and address long-standing issues like market manipulation, insider trading, and conflicts of interest. However, critics warn that the Reddit phenomenon is a recipe for disaster, driven by reckless speculation, herd mentality, and a disregard for fundamental analysis. They argue that these frenzies are unsustainable and ultimately harmful to the markets, creating artificial bubbles that are bound to burst, leaving inexperienced traders holding the bag. There are also concerns about the potential for market manipulation and the erosion of trust in the financial system. While the Reddit traders see themselves as the underdogs fighting against the establishment, their tactics could be perceived as a form of coordinated manipulation, especially when it comes to orchestrating short squeezes and driving up stock prices through unconventional means. Moreover, the sheer volatility and unpredictability of these meme stock rallies could have far-reaching consequences for the broader markets. Sudden surges and crashes can ripple through the financial system, affecting portfolios, retirement accounts, and even the stability of key institutions. Another issue that has emerged is the potential for regulatory scrutiny and crackdowns. As the Reddit phenomenon continues to grow, regulators may feel compelled to step in and impose stricter rules and oversight to protect investors and maintain market integrity. This could lead to a clash between the retail trader army and the authorities, further fueling the narrative of David versus Goliath. Despite these concerns, there's no denying that the Reddit stock frenzy has shaken up the investing world and challenged long-held assumptions about how markets operate. Whether you view it as a positive disruption or a dangerous speculative bubble, one thing is clear. The rise of the retail investor army has forever changed the landscape, and the industry will need to adapt to this new reality. As we move forward, it will be crucial for individual investors to approach these unconventional trading strategies with caution and a solid understanding of the risks involved. While the allure of quick gains and sticking it to the establishment may be strong, it's important to remember that the markets can be unforgiving and reckless behavior can have severe consequences. Amid the frenzy surrounding the Reddit stock phenomenon, it's important to step back and consider the broader implications of this cultural shift in the investing world. While the rise of the retail investor army has undoubtedly shaken up the status quo, it also raises questions about the long-term consequences of such unconventional trading strategies. One of the most significant concerns is the potential for widespread financial losses among inexperienced traders. While the Reddit community may celebrate the thrill of riding volatile meme stock waves, the reality is that many individual investors could find themselves caught up in a speculative bubble that eventually bursts, leaving them with significant financial losses. This reality highlights the importance of financial literacy and responsible investing practices. While the democratization of the markets is a positive development, it must be accompanied by a clear understanding of the risks involved and a commitment to making informed decisions based on sound research and analysis. Another issue that has emerged is the potential erosion of trust in the financial system. While the Reddit traders see themselves as champions of transparency and accountability, Their tactics, such as orchestrating short squeezes and driving up stock prices through unconventional means, could be perceived as a form of market manipulation by some. This perception, coupled with the extreme volatility and unpredictability of meme stock rallies, could have far-reaching consequences for the broader markets. Sudden surges and crashes can ripple through the financial system, affecting portfolios, retirement accounts, and even the stability of key institutions. Moreover, as the Reddit phenomenon continues to grow, regulators may feel compelled to step in and impose stricter rules and oversight to protect investors and maintain market integrity. This could lead to a clash between the retail trader army and the authorities, further fueling the narrative of David versus Goliath and potentially undermining the credibility of the financial system. Despite these concerns, it's crucial to acknowledge the positive impact that the rise of the retail investor army has had on the investing world. By leveraging the power of social media and online communities, these traders have proven that they can move markets and challenge the dominance of traditional financial institutions and Wall Street giants. This newfound power in the hands of the masses could lead to greater transparency, accountability, and a more level playing field in the investing world. If a group of individual traders can band together and take on the establishment, it could force the industry to clean up its act and address long-standing issues like market manipulation, insider trading, and conflicts of interest. As we move forward, it will be essential for all stakeholders, individual investors, financial institutions, and regulators to find a balanced approach that fosters innovation and democratization while also maintaining market integrity and protecting against reckless speculation and manipulation. As we approach the end of our exploration into the captivating world of the Reddit stock frenzy, it's important to reflect on the broader implications of this cultural phenomenon. The rise of the retail investor army has undoubtedly shaken the foundations of the traditional investing landscape, challenging long-held assumptions and power structures. While the allure of quick gains and the thrill of sticking it to the establishment may be enticing, we must approach these unconventional trading strategies with caution and a deep understanding of the risks involved. The markets can be unforgiving, and reckless behavior can have severe consequences. Ultimately, the path forward lies in finding a delicate balance, a harmony where innovation, democratization, and the collective power of individual investors can coexist with market integrity, responsible investing practices, and robust regulatory oversight. It's a delicate dance, but one that must be mastered if we are to build a financial system that truly serves the interests of all stakeholders. As we bid farewell to this dive into the Reddit phenomenon, we want to express our heartfelt gratitude to you, our dedicated viewers. Your support and engagement are the driving force behind our channel, and we are humbled by the opportunity to share our insights and perspectives with you. If you haven't already, be sure to subscribe to InvestMinder and hit that notification bell. We've got many more exciting topics and analyses lined up, and we wouldn't want you to miss out on the action. Together, we'll continue to navigate the ever-evolving world of investing, staying ahead of the curve, and embracing the challenges and opportunities that lie ahead. Thank you for joining us on this journey into the fascinating realm of the Reddit stock frenzy. Your curiosity and thirst for knowledge inspire us to keep pushing boundaries and exploring the frontiers of the investing world. Until next time, stay curious, stay informed, and happy investing.
Thanks again for watching, and good luck with your dividend empire aspirations. Hope you found today's analysis helpful as you look for profitable new stock opportunities. This was InvestMinder. Remember, knowledge equals profit in the stock market. Thanks so much for watching, and please hit that thumbs up button if you got value from this video. Make sure you click to subscribe as well to get our next videos when we reveal the best new insider stock purchases. Invest wisely, trade carefully, and we'll see you next time. Disclaimer: InvestMinder is an independent stock market commentary channel for entertainment and basic informational purposes only. We are not licensed financial professionals and do not provide personalized investing or financial advice. P.S. If you stayed watching until here, you are awesome. Thank you for enabling me to keep making these videos with all the likes and subscribes. Have a great day, and we love you all.